and welcome to the Market Outlook webinar. If you're watching the recorded version of this, it was held live on Wednesday, 11th of January at 12:30 in the afternoon. This is a webinar that I do normally every Wednesday in conjunction with Under Markets. There won't be one next Wednesday because I'm away, but normally every Wednesday we do this, and it's a look back at maybe the last couple of days, see what's been going on in a mix of markets, currencies, indices, and commodities, and I look ahead, is the important thing, to try and figure out maybe where the opportunities might be in the days ahead. I'll just put the risk warning up while I'm talking so you can have a look at that, and then we'll get into actually looking at what's happening in markets. So it looks like I've gone too far. Hold on. There we go. I think last week was a bit of an odd week. It was the first week back, and it did feel that markets were still, maybe a little bit quiet. There's a lot going on in FX markets, not so much going on in the indices, but I think that has changed a bit this week, and it does feel the last couple of days that we've got sort of normal markets and normal market volume back again. So without further ado, let's take a look at the first market for today. So what I'm going to look at, if you follow me on Twitter, I put a bit about this up yesterday. I did a trade on it last week, and I'll talk about that in a second. But this is the pound against the dollar. It's an interesting one because of, I think, what was said by the Prime Minister Theresa May over the weekend. Concerns yet again. We're seeing concerns about what our Brexit is going to look like. So we've seen pressure on the pound this week. This is pound against the dollar that we're looking at. And it's pushed it back to a really interesting area. We had that weird flash crash that I've mentioned a few times, back in October, wasn't it, where we saw that really sharp, heavy sell-off in the early hours of the morning on thin volume, which was just still, I think, somewhat unexplained as to what happened. But for me, it's the levels after that are the important ones. It did sell off. This is a daily chart. So a few days later, it sold off. The pound sold off, hit about 120.90. And then rallied, and then about a week and a half later, sold off, hit 120.82, and then rallied. And we did see then, a move up through 127. So this whole 120.80 area is a big one for the pounds. And where we are now, it's traded 120.95 today. So we've come within 15 points, less than 15 points of those old lows after the flash crash. And I think there are a couple of ways, as ever, of looking at this. If you were bullish on the pound, this is a great buying opportunity, because the aggressive approach would be to be a buyer now at 121.17. A stop loss for me somewhere the other side of 120.80. Let's say, I don't know, 120.50. Let's give it a bit of a margin of error. So we've got, what's that, a 60, 70 point stop loss. But if this is going to prove to be a really strong line in the sand again from the pound, it should set up a move initially back to last week's highs around about 124 and possibly on to 127. So it's real sort of, I think, bounce or bust area, this for the pound. I must admit, I wouldn't be a buyer just yet because it's still too weak. We saw a little bit of strength yesterday off this level, but it still seems a little bit weak today. But it's the big one to watch, I think, the next couple of days, 120.80. How does the pound perform down here? I mentioned last week I had a trade on the pound, which I nearly got stopped out of. Let me just take it back out to the hourlies. So I think, here we go. So I think I bought in here 122.55, I think it was, and had a stop the other side of 122, and came within 5 points of getting stopped, but stayed in the trade. And it pushed up, the market pushed up to 124.30. I trailed my stop up and got taken out just below 124 on the way down. So it ended up being a good trade, and I was looking to buy back in, but we just haven't had any strength. We've seen the market on a daily basis, break the previous day's low, and even yesterday, towards the end of yesterday, or late last night, let's say 10 o'clock last night, when we started pushing above Monday's highs, that made me think, oh, actually, okay, well, maybe this is the start of a recovery again. But for me, that has been negated today by this little poke once again below yesterday's low. So I think it's an interesting one to watch. It's not one I will be trading today, maybe tomorrow, maybe on Friday, if we see proper strength off these levels. But 120.80 is the big one big one to watch. You could, I mean, building the bullish argument, you could say, it's a market where the RSI has been very oversold. End of December. So if you're a fan of the squiggly lines, as I call them, the RSIs, the oscillators, it's a suggestion the market down here was oversold. The market rallied, has come back, pushed a bit lower, but the RSI is above its previous oversold level. So it's setting up potentially for what's known as bullish divergence, where the market makes a low and then moves lower still, but the RSI is making higher lows. This can be a not bad suggestion that maybe the weakness is running out of steam. But let's see. So for those who wanted to construct a bullish argument from the chart, we're above support. It's been good support in the past, and we've got a bit of divergence on the RSI. So I think it's going to be really interesting to watch how it performs down here. So like I say, the aggressive trade is a buy now with a stop under those lows, those 2080 lows. For me, trying to be a bit more patient is to wait and see, just make sure it does turn around off these levels and see what happens the next couple of days. Of course, the risk there is that you miss out. The market rallies 200, 300 points. I don't get a chance to get on board, and in a week's time, I'm kicking myself. But let's see what happens. But I think pound against dollar, really interesting one to watch next couple of days. Talking about missing the boat, here's another one I missed the boat. I had an order on this one this week. I think this is really interesting. This is Aussie dollar, US dollar. I think this and one we're going to look at in a second, the dollar, US dollar, Canadian dollar, I think are a couple of interesting longer-term markets at the moment. I think we did touch on this one last week, but let me just remind ourselves, because we looked at this quite a bit last year. So this was Aussie dollar, US dollar, longer-term chart going back to March 2012, and the Australian dollar, the Australian economy is very much a commodity-driven economy, with all the mining and all that stuff. So when that took a bit of a downturn, the Aussie dollar took a bit of a downturn. But we saw these moves last year where it would come up. It did spend most of last year trying to recover. From January, made that low, the fresh low for the downtrend in January, but then spent much of the year trying to recover, but could never quite crack this sort of 77 to 78 area properly, and the downtrend remains in place. But despite that, we haven't been. It's now a year ago since we were down at these 68 lows, so we haven't continued the trend down so far, and it still seems quite perky, for want of a better word, to describe a currency pair. And I think if we flip over to the hourlies, you'll see it a bit clearer. So we've got a cracking trend. So this is the Aussie dollar, US dollar on the hourly chart over the last 5 weeks or so. So the market had been weak, and this for me is the perfect setup. But it was New Year, so I wasn't paying that much attention. Where the market hits a level, rallies. So up until now, the trend for me is definitely still down. Okay, so I've got no interest in doing anything. But then, as this day goes on, the market breaks the previous day's high. So for me, it's a suggestion, okay, maybe sentiment is turning. So the ideal setup is it has a little drift off towards the previous lows and then rallies again. So it's a real low risk entry point, which is one I missed there, but that was a perfect setup for me. But looking at this last week, we've got this trend that's chugging away. So let me just plonk this in. Am I drawing this the right way? Yeah. So our trend on Aussie dollar, US dollar, there you go. Looks something like that. Absolutely perfect trend that's been in place. It's only been in place since the beginning of the year. So we're not even a couple of weeks into this trend. But I had an order in, what was it? Day before yesterday. So I had an order. I had a stop loss below there, below 72.80, and I had an order in. I think it was at 73.20, and you can see the market came down to at 73.32. So I missed, and the market's moved higher. But for me, that's one of the clearer trends that we've got in FX markets at the moment, on hourly charts at least, is this Aussie dollar, US dollar trend. So I think it's an interesting one to watch. So for me, I think that the chance is that we go back up and test these old December highs. It's only from last month, but there's still maybe another 150, 130 points maybe still to come in that move. So I'd still be looking to be a buyer of the Aussie dollar, US dollar on weakness. So I think that is one of the more interesting trends in the short-term charts. And there's lots of support, big support back here, 72.80. Support from yesterday, is that? Yeah, at 73.30-ish, the low from yesterday. So plenty of good support for the Aussie dollar, US dollar. One I did actually manage to get filled on which is not a million miles away, relatively speaking, is the New Zealand dollar. So I put an order in for the Aussie and an order in for the New Zealand dollar, US dollar, and it's a similar sort of setup. You know, we've touched on this a few times last year. Since we started covering it in the summer, the trend, you know, has been doing a good job of reversing. We'd had this recovery trend that had been in place in the New Zealand dollar, US dollar, and that, you know, cracked a bit back then. But for me, I was thinking, well, we've got good support at sort of 69, good support at 69.50, so maybe we'll see another push higher. So that's one I'm in at the moment, from about 69.50 is where I'm in. And I got filled the other day. I don't know, where was it? I think it was in here, 69.50ish down here. So luckily, I did get filled on that one. Then the market moved 100 points in my favour. My stop loss, though, is a long way away. I think it's probably about 80 points away. So I wanted more of a move than that. And then I've given it all back, but I'm hoping I'm about 40 points in profit at the moment. I'm hoping it's gonna push higher and extend that uptrend the way the Aussie dollar, US dollar has done. So, you know, we'll see. I'm not, you know, I don't think things like technical analysis is a crystal ball. You know, I think maybe that's a misconception that plenty of us have in the beginning. When we look at charts, we think, oh, they can perfectly tell the future. Clearly, they can't. You know, but for me, it does help set up low risk, potential high reward opportunities. You know, so for me, this whole 69.40 to 69.60 area has been good support for the New Zealand dollar. So that's one I've got on at the moment, and it's going all right, but I've got much less profit than I had maybe this time yesterday. The other long-term one, I think we looked at this last week, but I did talk about it just before that last US Federal Reserve meeting that we had in December, and the market absolutely took off. But this is the dollar against the Canadian dollar. If you've never looked at this, historically, in recent history at least, it's a great trending market, you know, and once it starts going, it really does get its backside in gear, you know, and have some great trends. And we had this run from 2014 up to the end of last year, or beginning of Jan 2016, and then spent a lot of the first 6 months of last year in decline. And then since then, it's been building this trend, and it is almost textbook, which can make me a bit suspicious when something is a bit too textbook. I think we do get a bit suspicious. But if we look at the trend, dollar Canada, it's like that. So where we are now is where we were, chart speaking, before that Fed meeting in December. So the trend for the dollar against the Canadian dollar has been up for the last 8 months. We've got this trend line in place. We've got a bit of support on the trend line at 132. It's currently 132.44. So again, if it's going to rally from anywhere, this is the place it's going to rally to. Now, if I was looking, and one of the trades I've been looking at here is a longer term trade with a stop loss under these old lows from 130. So there's this December support at 130.81, and there's this really solid level, famous last words, from September and October at 130-ish. So for me, if I was, you know, if you were taking a longer term view, it's fine to have a 250 point stop loss. You know, for me, if I think there's maybe 500, 600, 700 points in the trades, you know, then that would be putting it up to here, which is not completely ridiculous. So I think from a longer term point of view, the dollar against the Canadian dollar is an interesting one. I may be a bit reluctant at the moment because it's been a pretty quiet couple of days, but so this is the hourlies we're on now. So this is over the last week or so. But you can see, I think, what a relatively good job this 132 area is doing. So there has been a real appetite to be a buyer on dips to 132. So I suppose that maybe the dip your toe in trade is to be a buyer now, 132.43, with a stop loss underneath these recent lows, the other side of 131.70. So that would give you, what, a 70, 60, 80 point stop loss, something like that, if you thought this was the start of a big move higher. But I'm quite happy to watch it for a couple more days and see what happens. But I do think from a daily point of view, for the trend fans, it's a really interesting one, dollar Canada, because that is almost a textbook uptrend that we've got going on. Let's talk about stock markets. I think I said last week it was all a bit boring, particularly with US markets, but UK markets, you know, the trend was still up, and I'm sure, you know, you've seen the news. I think it's the FTSE's broken records this week, so not just in terms of hitting all-time highs, but hitting all-time highs every day. Was it for 9 days? I think something like that. It's never done that before. And you can see it's a really odd chart. This is the daily chart that we're looking at. You can see just how tight the range has been. Then we get a bit of a surge on January the 3rd, and the market's crawled higher. But it's clearly a market that's in an uptrend. And as we know, from all the stuff post-EU referendum last year, a weaker pound traditionally helps the FTSE because so many of the companies make their money overseas in another currency. So a weak pound is good, and that's definitely having an impact as well. But you can't argue with that trend on the FTSE. That is a cracking uptrend. So that's going back to the 13th of December, and the market's moved 400 points, which is about 5%, is it? Maybe a bit more than that. So for me, for the FTSE, you still want to be a buyer on dips, with that sort of trend. We've got all sorts of levels. If the market started to sell off, levels from last week ahead of 7,200, and then 7,160, and then 7,050. So I don't think famous last words are in danger of seeing the FTSE crash anytime soon. But it has made fairly sort of slow and steady progress. But being a buyer of dips and running trades, for days and weeks rather than minutes and seconds, has been a profitable approach on the FTSE in recent weeks because of that trend. So it has been a cracking trend. So we'd have to see any weakness as a buying opportunity. Let's take a look at the US markets though, because the US markets, they're still a bit messed up. I think we did see the S&P broke a bit of a level, but let's have a look at the Dow first of all. So the Dow, there's still this Dow 20,000, I think, that the media are waiting for, and being extra stubborn, the Dow keeps having a look at 20,000, but they're not actually getting through it. So there's the move. This is the daily chart we're looking at. Clearly, that's the election, the Trump win. But you can see just how tight trade has been for, the best part of a month now. I think it's been like a couple of 100 points, the range on the Dow over the last month. Let me just have a quick look. So if we go back to December the 12th, so the lows are about, about 19,730 and as high as 19,995. Yeah, so it's 250, 260 points. So it's a really, really tight range on the Dow, which is quite strange. And I suppose you could, if you could say, well, maybe the market is gearing up for a big move and it's going to wrong foot everybody again. And I do think if we need the market to break out, so it needs to break out through 20,000 and hold it, or it needs to break down below 19,700, and then I think we'll see much more of a sustainable move. But at the moment, it's just a bit trapped. That doesn't mean there aren't opportunities. There are. Again, I put this on Twitter yesterday. If there's any interesting chart stuff, I'll put it on Twitter. I try not to tweet too much irrelevant sort of rubbish, but if there's stuff that is interesting, I'll put it on Twitter. And I think yesterday, what I was looking at yesterday ahead of the open, I think the market was maybe here and seeing whether this trend on the Dow was going to hold, but saying how there'd been good support from last week ahead of 19,830, then 19,800. So I think for the Dow, any if you're a short-term trader, any weakness back to this sort of 19,800 area still looks like a buying opportunity. And we did get, the market moved about 120 points off this level yesterday. So I think there are opportunities out there, but you have to be nimble. I think it is a bit, if you're going to trade it, I think it is a bit of a day trader's market at the moment. Or of course you could go short. If you thought the market was going to collapse, you go short here at 19,860, stop loss at the side of 20,000. So you've got, 200 points risk, potentially, lots and lots of points if the market does start to crack. Let's see what happens. Someone's asked about the DAX. We'll have a look at the DAX. I've got a trade on the DAX as well at the moment, so I'll have a look at that in a second. But the S&P 500, it's a similar sort of thing to the Dow. We did get on Friday. Was it Friday? No, it wasn't. I'm talking rubbish. That was we had the payrolls last Friday, didn't we? But you can see it's a similar thing. Similar thing for the Dow as it is for the S&P. It's pretty dull, but we have a definite. I had an order in to buy at 22.64 yesterday, and it didn't get filled. Missed it by a couple of points, and the market did move 6 or 7 points higher. but you can see on the S&P how 2265, 2260 has underpinned the market. So the S&P has got plenty of support. So I think again the odd sell-off still looks to be a buying opportunity, I think, in these markets until we get one of these big levels from the last month that gets cracked. I think if we see one of those big levels break down, we'd expect a sharp sell-off. If we see it break up decisively, then the next leg higher is underway. But at the moment, it's a strange old market in the US. Let's take a look at the DAX then. So the DAX, this has been, again, I think it's been a bit frustrating. I did quite a few trades last week, and I did quite a few rubbish trades as well in the end on the Bund, the German Bund. But I think what saved me was the pound trade and a couple of trades off the DAX. And it's really, you can see again, very much like US markets, how these previous highs and lows have been important. Okay, there has a little wiggle through it, but that's why I want to give my stop loss a bit of room. But on the DAX, so 11,530 is big support. 11,519. So that level ahead of 11,500 has proved to be big support. So I ended up buying in yesterday. I'm in from 11,559, I think, and the market did crawl its way high yesterday, but then sold off this morning. It nearly stopped me out. My stop loss is down here and has bounced back. So it's in profit. But again, I think it's the sort of market that if you're looking at it over a week, 2 week period, there's no direction. It's another market, I think, for the nimble finger clickers out there, the mouse clickers out there, where, down here, I want to be a buyer, up here, maybe you want to be a seller. I've moved my stop to break even now. So we'll see what happens. But like US markets, it needs to break out one way or the other. The FTSE is in a bit of a league of its own at the moment because it's powering out to fresh highs, but the DAX and the US markets still very much range bound. So it's a little bit odd, I think, at the moment. What is interesting, so we'll leave stock markets for a second. So FTSE trend still up. Any weakness looks like a buying opportunity. Still weak pound, definitely helping the FTSE. DAX and S&P and the Dow really sideways, tradable, but tradable over, I think, minutes and hours rather than any sort of meaningful direction. But let's take a look at a couple of the commodities before we wrap things up. My old favourite, price of oil. I'm really tempted to start trading it again. I think I mentioned, if you've been on these webinars a few times, I can never seem to get it right when it comes to trading the price of oil. If I buy it, it goes down. If I sell it, it goes up. But we came into this year. This is the February contract, February 2017. So we came into this year very strong. The market's breaking out, having a look, or it was breaking out in December anyway. So I do still think, I think maybe one of the themes for this year could be the recovery in the price of oil. I don't know where it's going to go, but it wouldn't be surprising to see it back up in the mid-60s. Already, I'm sure you're seeing the same. Petrol prices seem to be back up at, I don't know, 125, 120, 125 a litre. So I think we could well see a push higher by oil this year. But as usual, the question is, how far is the thing going to sell off before it turns round again? And I think that's always the tricky bit with oil. But I think again, it's another one I think I put on Twitter yesterday because I think the levels were interesting and obvious. So here we go. This is our oil chart. So we've got, first of all, support where it is now. So we had the dip before that weird Sunday move in December on the Sunday night where it gapped higher, but the dip before that at 50.76, 50.75, let's say. So it's sort of sitting on that level now. And then after that, we've got support out at 50. Then we've got much bigger support at 45, 46. So for me, I am bullish on oil. The only question, and that's just the important question, is it going to drop to 45 before it starts to move to 60, or is it going to start to move to 60 this afternoon? So I think it's a difficult one as ever for me. Oil. I think it's still weak at the moment. I think we saw where are we now? That was yesterday. I suppose it has held so far above yesterday's low, but it had such a big sell-off yesterday. It's a long way below yesterday's high, and if you drew a trend line, you've got a definite downtrend in place. So for me, I would be looking to buy oil, but I wouldn't be in a hurry to be buying it just yet. But there are some really big support levels, and maybe if it does drop 10%, that's maybe the better trade. If it drops down to this sort of area, we're sort of back onto that trend then, aren't we? We've got plenty of big levels to set our stops the other side of. So maybe that is the better trade. But I do think this year we'll see it in the mid 60s. Let's see what happens. And finally, gold. Gold is coming back. I think this could be the other theme for this year. I think there are maybe the three big markets for the year: gold, the pounds, and the price of oil. So, we saw that move last year in gold. Just to recap, we'd had years of a falling gold price after peaking above 1900 in 2011. Then we had sliding price, but then last year we saw a much bigger rise than we'd seen probably in 5 years, I think, for the price of gold, 4 years, something like that. So I was quite bullish, and the market did push higher. But then it broke support on the way back down. But I think I wrote a bit more of an extended thing on my website. But I don't think I think it's too early to write off the recovery in gold. And over the last couple of weeks, we have seen this recovery. And if we flip it over to the dailies first, there we go. So this was the trend since the summer, of a falling gold price. And then we've had this recovery that's been in place since December. So I haven't done anything with it, but I would still, I should really have been paying a bit more attention and looking to buy the dips. But in gold, I would still want to be a buyer of dips. We have this trend that's in place, regardless of where you draw it from. I suppose, if we drew it from down here, beginning of the year, then our trend line it's quite a tight one. It looks something like that, if I can get the lines right. I'd say maybe the truer trend looks is maybe from down here as a more gradual doodah line, something like that. But either way, it's made a good start to the year. It's had a good couple of weeks. I think the price of gold. So I'd definitely be inclined to be a buyer. Any weakness back into this sort of area, be a buyer. I think again, from an investor's point of view, if you were taking a view on gold for the year, where would your stop be? I suppose if you're going to be taking a long-term view, the closest I would want it is below those December lows. And it sounds a long way away. It's $60 away, but it's only a month ago that it was down at these lows. So that would be the tightest I'd want my stop. And I think for the more conservative out there, you'd go beyond those lows from the end of last year. So I think it's another interesting one to keep an eye on. This year, I think the price will go up. Oh, what's your Twitter name? If you search for, Jones the Markets on Twitter, that should come up. That's my Twitter name. But I think for now, that price, that trend in gold, still very much valid. So that one, and the Australian dollar, US dollar, still clearly trending at the moment. The other market to watch is pound against the US dollar, because that is such a big level. It's where it was. It's 21.20. To see how that big level performs. Stock markets, FTSE still strong, but everything else still very much sideways. So keep an eye to see if any of these big levels break. If they do break, I'll put something on Twitter. But let's we need to see a breakout by these US indices, up or down. But still plenty to keep an eye on. I think things have started getting back to normal. Someone was asking, how do I decide where to buy, where to get in? I'll show you something I do use. If I do a couple of things. Let's have a look at the DAX from this morning. The DAX from this morning is a bad example. The S&P. Let's look at the S&P from yesterday, the trade I missed yesterday. So for me, and it's not rocket science, but I'm a big fan, as I've no doubt mentioned a few times, of the importance of previous highs and lows. Yeah, so coming into yesterday for the S&Ps, this is about 2:30. This is where the US markets opened. We had this big low from the 6th of Jan. Is that the payrolls low? 6th, 7th? Yeah, it is, isn't it? Yeah, that's the low from the payrolls. Okay, so the big low from last Friday. So for me, looking at this chart, I'd want to be a buyer. If I'm gonna buy it, the ideal place to have my stop is the other side of this low, because the market has moved off it so sharply. So any weakness back to here, I want to be a buyer, and I missed it. I had my order at 64. Just here, the market went as low as 65 or something, and then took off. So that for me is one thing to look at. Where if I'm wrong, where am I going to get out? So I don't want to be just buying in the middle and having a stop the other side. I want to be buying down here. And the other thing I think about is the risk reward, and none of this stuff is original, but for me, if I think, well, if my stop is going to go at 22.62, let's say, there's my stop loss, and my target is for a run back up to 22.80. So there's 18 points difference between my stop and my target. If I divide that 18 by 4, and I shouldn't do this now because I'm trying to do this mentally in my head. So if I say 18 divided by 4, 4.5, if I add that to my stop, 22.62 in this example, then it says, right, if you buy at 22.66.5, if you get stopped out, you lose 4 points. But if the market gets to where you thought it was going to get to, you make 13.5 points. So for me, that's a 3-to-1 risk reward. Does that make sense? So it will highlight an area where I need to think about buying at 66. So it helps me pick out an area ahead of support or ahead of resistance where the risk reward looks good, rather than just buying in the middle. Because if there is one thing I've learned over the years, is there's never a sure thing in a trade. So if you're doing a trade and you're risking losing 100 quid to make 100 quid, it's a mug's game. So I want to look for trades that have got the potential, if I'm risking 100 quid, to make 300 quid. And if over the course, like last week, if half of them end up losers, okay, you lose 100 quid on the ones that are losers, but the others hopefully make a multiple of 100 quid. They might make 150, 200 quid, whatever. But having that balance between risk and reward is really crucial, I think. I think the mistake plenty of us make in the beginning is we focus on getting all of our squiggly lines on the charts completely right. Whereas I think over a series of trades, when you're right, you want to be making a multiple of what you end up losing when you're wrong. Because I think, I don't know how successful most people are, but for me, over a series of trades, it's not a million miles off 50-50. If I look again, particularly the last couple of weeks, I had a bit of a scrappy week last week, but a much better week this week. So I've done so far this year maybe about 12, 13 trades, and it's about 50-50. Half of them made money, half of them lost money, but the ones that have made money have made more than the ones that lost money. So I think that break between risk and reward is a really important one. But anyway, let's wrap things up. Enough jibber jabber. So I think so we won't be doing this next week, but I will update the stuff on Twitter if there's any interesting levels that get broken. I am doing a social trading webinar with Aondo on Tuesday night next week at 7:30. So if you go on the website, you can sign up for that. And we'll do the market outlook again in 2 weeks' time. But I think that the ones to watch: pound against the dollar, that big level; dollar Canada, because of that big trend; and the price of gold, because the trend's still going up; and the Aussie dollar, because that trend's up as well. So there's plenty to keep an eye on. We'll wrap things up there. I hope you found it useful, and have a good week's trading.